Hello, good afternoon. Thanks for spending your lunch hour with us here at Propel. Today we are presenting the webinar called Managing Cash Flow for Nonprofits. And if you're not familiar with Propel, welcome. Our mission is to fuel the effectiveness of nonprofits with guidance, expertise, and capital. We are a nonprofit that serves other nonprofit organizations. We have a loan fund where we are able to make loans to 501c3 nonprofits in Minnesota and the surrounding states. We have a great strategic services program. We do a lot of training, like this webinar you'll see here today, and also before we were socially distancing, we have a lot of in-person trainings as well. And we have a fiscal sponsorship program as well as some accounting and finance expertise on staff. So a little bit of everything at Propel. I think this webinar is particularly timely in the moment that we're in today because everything in the last couple of weeks has changed. So hello, I'm Sarah Jackson. I'm a loan officer and financial specialist. And I've been at Propel for just over 2 years, and I have a background in nonprofit governance or nonprofit leadership, and also a background in journalism. And so I haven't always been a finance person, but one of the things that I love about this work is really being able to kind of translate complex financial topics. And make them understandable and easy for folks that work in nonprofits to understand. Because I think that we've all been put into situations where, like, all of a sudden you're the finance person, right? You work in theater, you're an opera singer, you're a creative person, you're an engineer, and now you're also the treasurer or the accountant, or probably not the accountant because you need to be trained for that, but you know what I mean. A lot of unlikely finance people are working in nonprofit finance. Here we are. A few weeks ago, you may have registered for this webinar and the world was a different place. But now here we are working in a time where we are all navigating the uncharted waters of a global pandemic. And so the things that we maybe considered for our budget that began on January 1st are different now. Things are changing rapidly. And so I think we all have this feeling of like, oh, it's fine, everything's fine. We're gonna roll with it. We're gonna figure it out. And I'm hoping that this cash flow projection tool will be helpful for you. My world has also changed because here I am with my 15-month-old son, Thomas, who is also now my full-time coworker. So I'm a loan officer, financial specialist, and full-time stay-at-home mom because our daycare is closed. So I join you in the sort of weirdness and change of this moment. And I ask for a little bit of grace if this happens to me during our presentation, because we might be interrupted by a little one. I'm not sure. I hope not. So let's talk a little bit about what we're going to get into today. Our goals for today's webinar are for you to understand the importance of cash flow management for nonprofits, and to learn how to create accurate and useful cash flow projections for use in your organization. I also hope you'll understand the cash flow considerations for different types of income and expenses, and we'll talk in more detail about what that means. And then also finally, and probably most importantly, learning to avoid and manage cash flow problems or challenges. But my real goal, and this is sort of the today version, the global pandemic COVID-19 response edition of this webinar, is I hope to give you a helpful tool that will assist in planning for the next few days or weeks or months are ahead, because I know that there's a lot of uncertainty right now in funding, in programming, across the board. And so I think that a cash flow projection is a really helpful tool at a moment like this where there is so much uncertainty. We'll take a quick second for a poll, check in, and see how you're all doing. Are you strangely calm? Are you panicking, worried, scared at this moment we're in? Are you socially distanced? Are you following orders? Are you ready for a challenge? Or are you very like it's crazy. What year is it? Where are we? I don't know. I know that personally, I've been feeling a mix of all of these things over the past couple of weeks. And at Propel, we have a practice of kind of asking each other, how are you? But how are you really? And I just wanted to take a minute to acknowledge sort of the moment we're in being so different than one that we've been in before. There's a lot of uncertainty. Um, appropriate that I cough there. There's a lot of emotion and instability right now. And we're all just kind of searching for answers to figure out the best way to move forward. And so, I just want to offer that Propel has a lot of resources for you. And I hope that we could be helpful at this time for you and for your organization. So that brings us to why should we manage cash flow? So really, I want to just briefly talk about what does managing cash flow mean. And then also, I want to mention right at the outset that Propel has a really great template for managing cash flow. It's a spreadsheet. Um, and as we move a little bit farther into the webinar, you will see some examples that are taken right from our template, so you'll get to kind of see what it looks like. But if you are listening along and you want to download the template right now, just go to propelnonprofits.org, and in the search bar, just type in cash flow, and you'll be able to download that Excel spreadsheet to get your own cash flow projection started. Managing cash flow is really just about sort of managing the ups and downs of your year, of your cycles of income and expense. And hopefully at the end of the day, we are able to finish with some cash in the bank. And so managing cash flow helps us ensure that we do have sort of money left over at the end of the month. This is important because a lot of nonprofits don't have a regular income coming in constantly at all times. Perhaps you are a youth organization and you have reimbursing contracts. The moment we're in right now, perhaps you are a youth organization with no activities scheduled for the next 90 days. And how are you going to sort of figure out how to continue operations if you don't have income coming in because you don't have activities going on? Another really common sort of seasonality in cash flow is like a theater that has a really busy season. There's shows that are running live, and then there's downtime, and then there's a show, and then there's downtime. And so the ebbs and flows of that income and expense can be really hard to manage. Sort of exaggerated now, perhaps you're a theater that must close while folks are practicing social distancing. So this moment creates some particular challenges for us, at least that I haven't seen in my work with nonprofits in the last few years. So what are the goals generally of managing cash flow? The goal is to deliver your programs effectively and stay on track with organizational priorities. So, always keeping your mission in mind and being able to do your work and operate day to day today. Also to maintain good relationships with vendors, contractors, and financial institutions. Even though we're nonprofits, we are still businesses. We're still out in the marketplace paying bills. We have mortgages, we have loans, we have phone bills to pay, and we need to maintain good relationships with the people that we work with. It's also an interesting opportunity to be able to take advantage of new activities or bulk discounts or other opportunities. Let's say that you have a really sort of flush season where you have a lot of extra cash surplus in the seasonality of your business. That might be the opportunity that you need to buy a new van, to stock up on new computer equipment, to buy a new accounting system, what have you. But when you track your cash flow and you know when those ebbs and flows are, you're able to take advantage of new opportunities. And finally, when you track cash flow, it really helps save management time and prevent staff anxiety, because you know that you have money in the bank, or you know that you won't have money in the bank, and you can take steps to sort of to ease that burden. We often joke at Propel that the cash flow projection is the executive director sleeps at night document, because often an executive director or another financial leader in the organization is keeping all of this information in their heads, and it's what keeps them up at night. And so when you finally write it down, when you get it down on the spreadsheet, when you see it on the screen, you can relax a little bit, just knowing that the information is out there. It's not just living in your own head anymore, and then you can sort of take steps to move forward. In this moment, this unique moment we're in together, I'm hoping that we can come out of this unprecedented moment with cash, so that you can resume normal operations at some point in the future. So if we're able to sort of project our way through this weird time we're in, I hope that we all have cash left over so that we can, pick up business as usual, or business as we'd like it to be at some point in the future. So what causes low or negative cash flow? And when I mean that, it really just means that we're overspending, right? That you don't have money left at the end of the month. Sometimes that is due to the timing of receipts or disbursements. So, you thought you were going to receive your check from X Foundation on the 15th, and you actually aren't going to get it until the 31st. That could cause you, to miss a payroll, or, to go negative in your bank account. Very much so. If you are counting on the income being in on a specific day. Sometimes we are affected by changes in revenue sources or payment structure. So perhaps you have a grant that has been gen op for a long time. You just get all of the money in one lump sum, and then you can spend it down as you'd like. Perhaps that switched over to a reimbursing grant. So now you have to incur all the costs at the outset, and then you get reimbursed for that. Maybe you have collection problems. So if you are an organization that has a lot of fees for service, and let's say you've invoiced clients for services that you've already provided and they aren't paying you on time, that could also cause a big cash flow problem. So people aren't paying you at the speed at which you need them to. Another cause of low cash flow is just a deficit in operations. So if your expenses are exceeding revenues, if you're spending more than you're bringing in, that absolutely can cause a cash flow challenge. The last two are really, I think, the moment that we're living in right now. It's unexpected events affecting income or expenses, and changes outside of our control. So I think it's really hard for any of us to predict that there would be a global pandemic, or how that would affect the normal sort of operation of our businesses. It's something we didn't expect. Hopefully we planned for it on some level, but this is a moment where we're all just kind of scrambling to figure out what happens next. And I've talked to a lot of clients and partners over the last few weeks where, their sources of income have just dried up. They can't host events anymore. They can't hold classes. They can't welcome people into their theaters or their concert venues. And so that is a huge change to the business model overnight. And again, so I hope that this cash flow projection will be a source of help and maybe some comfort in this time as we try and figure out what to do. So we have 4 foundations of cash flow management, and we'll walk through each of these, but they're planning, preparing, responding, and understanding. So the first part is planning. So when we talk about planning, it's really kind of twofold. One is that you have organizational budgets prepared for the organization. So when we talk about a cash budget, that's really everything that you plan to take in and spend, income and expenses on a cash basis month to month, as well as accrual operating budget. So this is if you do accrual accounting in your organization, this is how you would, create a standard budget. A big difference between cash budgets and accrual budgets is, paying interest on loans, for example. If you have an accrual budget, you just budget for the interest that you pay on a loan. If you have a cash budget, you can budget in the full payment of principal and interest in the loan. And that can be a big amount of money that goes out the door that affects cash flow month to month. The next thing, as we plan for better cash flow management, is to create a cash flow projection system that fits your organization. So we really do recommend at Propel using the cash flow projection template that we've created, or something like it. You can plug in, your cash flow, your month-to-month budgets, cash flow budgets into a system like QuickBooks. But the great part about using the spreadsheet we've created is that you can create multiple scenarios. You can make changes really easily. It's just like it's a really nice tool, and it's a flexible sort of medium using a spreadsheet like that. The next part of cash flow management is preparing, and this includes anticipating cash shortfalls. So once you have prepared your cash flow projection, you will be able to see if there are any parts of your year where there are shortfalls. And that will allow you to prepare. It'll allow you to plan for and to use appropriate options to avoid or manage those shortfalls. So for example, if you do see that you'll have shortfalls, maybe you can move up payments, maybe you can look into a line of credit or a bridge loan, figure out a way to sort of even out that cash flow. And we'll get into a lot more detail on some of these suggestions as we move through the webinar. The next piece, important foundation of cash flow management, is responding. And so, when we are doing underwriting for our nonprofit loan clients, a cash flow projection is often one piece of that loan application. And we've definitely had clients before that just create that projection for the one-time use for the loan application. But really, a cash flow projection is most useful when you're continually monitoring it and making changes. As you receive new information about your income, when it will come in, about changes in your expenses, you should always be updating that information in your cash flow projection, because it will make the document most useful for you if it's always up to date. It also, at a moment like this where so many things are in flux and the pace of change is quite rapid, having this information, having a cash flow projection prepared and maybe a few different scenarios of a cash flow projection is going to help you respond more quickly to challenges, and will also give you, it's a great tool that you can provide more information about, sort of the scenarios and the situation to your board or other leaders. The next piece, or the final piece, is understanding. And so this is just, acknowledging that our cash flow projection and our accrual budgets are connected, but they're different, right? The cash flow projection is, I liken it to sort of balancing your checkbook in advance of, when I was first out of college and I wasn't making a lot of money, I would write down what I would get in my paycheck on Friday, and I'd subtract out all the bills I needed to pay and rent and groceries and things like that, and then see if I had any money left over for doing fun things, for example. That's really what you're doing when you're tracking cash flow, but you're doing it at an organizational level. You also are able to use the cash flow considerations as part of organizational planning and management. So when you know where the sort of peaks and valleys are of your income and expenses throughout the year, you're able to make plans, right? You know that there are times of the year perhaps that you need to sort of button up and be a bit more conservative. And there are perhaps times where you can, make big capital purchases you've been planning for, or put some money aside into savings. So those are all important things. So what information is needed to create a cash flow projection? So this is kind of like the before pandemic version of what is needed, because I think right now our need is to create a cash flow projection might be a bit more urgent, and we really just need to know what money is coming in and when, and what bills do we have to pay. And that at a very base level, that is exactly what you need to create a cash flow projection. In times where there's maybe a little less urgency, having your annual budget prepared, understanding the assumptions behind your budget and what the plans are for revenue and for development throughout the year, those are all really important pieces. The next part is financial reports. So your internal monthly financial reports, let's say your income and expense compared to your budget, having a good understanding of your balance sheet of what cash or what funds are unrestricted and what funds are restricted, and maybe some historical financial information that could be found in your audit or your 990 return. I'm kind of a finance nerd, and I do like looking at multi-year projections and trends, but this might not be the time for that for you. What is really important to understand at this moment is some balance sheet items, and that would include our cash balance. So how much cash do you have in the bank? And of that cash you have in the bank, how much is unrestricted? How much can you spend in your operation right now? Let's say, for example, that you have $100,000 in the bank account, but you know that 25,000 of that is reserved against restrictions. So for a future program or a future time period, and you can't spend it. That means that right now in your operation, you only have $75,000 to spend. And that's really important to understand right now at a time where, maybe you're feeling a cash crunch. It's also important to understand how much you have in your accounts receivable and also what the terms of those are. So are you expecting most of that money to come in the next 30 days? Or is a lot of it like 60, 90, 120 days past due and you don't really think you'll be able to collect that money? Really kind of understanding those two things, including what you also have to pay as far as bills are concerned, loans, and what the terms of those items are really important at a time like this. The other part is to understand kind of what is ahead of you as far as what are your sources of revenue that you're expecting? What are your contract and grant structures? Do you have a lot of reimbursing projects out there if you're not doing work and you can't ask for reimbursements? How does that affect your revenue streams? Perhaps also there will be some new grant opportunities in this moment. I know that philanthropy is really stepping up in Minnesota and across the country at this moment to come to the aid of nonprofits. So keep your eyes open over the next few weeks for developments in that area as well. It's also important to know sort of what your major expense items coming up are. Perhaps you had planned capital purchases, equipment, or perhaps you're in the process of purchasing a building or some other large equipment, and that may be put on hold for now. But just having knowledge of all these things at this moment is really important. So, who needs to be involved? This question is kind of a two-pronged one. I would say who needs to be involved in creating a cash flow projection, and then also who needs to be involved with sort of the decision making. And so generally speaking, I would say that staff members, either the executive director or the finance staff, finance director, depending on what your organization looks like. I know a lot of executive directors do every single role in the organization. I was one of those executive directors at one point. But really, so you may be the only person creating this cash flow projection. And then, you know, depending on what your projection says to you, if there's shortfalls coming up, if there's challenges or not, you can figure out who else needs to be involved if there are decisions to be made. I'm going to talk a little bit later about kind of how we should present information to our board and what kind of conversations we might be wanting to have with our board right now. But I'll just kind of leave that here on pause for the moment. So let's talk about projecting cash flow. The reason I think that projecting cash flow is particularly a helpful tool at this moment, it's because cash is really what matters in a moment like this, where there's so much uncertainty in the world and in our businesses. If you're on budget, if your balance sheet looks great, if your income statement looks great, it doesn't really matter right now if you don't have any cash left. So this is going to be a helpful tool to help you figure that out. So under normal circumstances, I would say that we want to begin creating our cash flow projection with the realistic budget that our organization has approved. So you'll see here, if we go to the next slide here, what we need to consider first from our income is when will income be received? So this example organization that we're using in the webinar here has income from government grants, foundations and corporations, individuals, and then also some earned revenue through special event income and user fees. So the things that we need to consider are sort of when do those monies come in based on activities? Do you have one special event per year where you bring in that whole 15,000, or do you have, quarterly events or monthly events? Is your government grant rolled out in equal portions throughout the year? Are you reimbursed? Do you have ebbs and flows in that financing? These are all, or in that money. These are all things to consider as we think about tracking cash flow for the organization. The next thing we need to think about is when will our expenses be paid? And so typical expenses for every organization, the biggest number is always going to be payroll and benefits. Then you have program projects, special events, marketing, things like that. Perhaps you also have some large purchases or capital purchases or payments of things that are outside of operating expenses, like loans or past due payables, things like that. I will make a note that, for example, we budget for depreciation, but depreciation is not a cash expense. So that is something we do not need to include in our cash flow projection. Whereas a loan payment, we only budget for the interest that we would pay versus the full principal and interest payment. So that's something we can chat about a little bit later. So I guess I just mentioned that here. So cash flow does not necessarily relate to our fiscal year. I always like to have a cash flow projection that goes 12 months out from the month we're in. So if we are in March right now, I want to have a cash flow projection that runs March through next February. As we move into the next month, we'll go April through March and so on. So always trying to keep a projection 12 months out. And just a reminder that we don't include non-cash expenses in our projection, and we do include all cash receipts and disbursements. So when I mentioned before that this is sort of that moment where we begin to translate from our budget document into the Propel cash flow projection spreadsheet. So the left side of your screen is the budget that we were just looking at for this organization. The right side is the cash flow projection template that Propel has created. And so there's a spot for all these different items that are from our budget: government grants, individual contributions, fees for service, special events. And then below we have payroll tax, office expenses, things like that, as well as some disbursements for capital expenses, including technology and vehicle purchases. So these things are all laid out here. And this is then the next step. What we do is considering when we will actually incur these expenses or receive the revenue into the organization. We begin to build out this cash flow over the next 12 months. So, for example, you may not receive money from your government grant every single month. As we begin to fill this out, the first month we have nothing, the second month we have 19,000. Same with confirmed grant. So this is where we begin to translate the numbers from our budget into sort of the real like month to month tactical part of cash flow projecting. So here's the sort of key piece, and we talked about this earlier, is really understanding what your unrestricted cash position is. And this might come from the balance sheet. It might take a little bit of factoring if you need to take out restricted funds. But what you want to enter here as your beginning cash on hand is the amount of cash, unrestricted cash, that you had in the bank on March 1st, for example, because it's the month of March. It's still the month of March, right? I think it is, yes. So let's say we began the month of March with $35,971 in the bank. That is what we put as our starting number. And as we look down this column, we'll see all of the income we anticipate in the month of July and all of the expenses we anticipate in the month of July. And that brings us to an ending cash number of $19,121. So again, this is what we'll be doing over the course of 12 months. Now we'll look at a few scenarios together. So once you get all of the information sort of in a draft spreadsheet, then the sort of fun of managing your cash flow really begins. And today, I think really what this is a scenario planning tool. As our income streams are changing a little bit, as our expenses may be changing a little bit, this cash flow projection is an opportunity for us to sort of run a few different scenarios and see what might happen. I'm doing this with a lot of clients right now, just kind of figuring out scenario A, scenario B, scenario C. And so one version of a cash flow projection, which is not really helpful, is just taking your budget and dividing by 12. You'll see in this example on the screen, it literally is just every single item from the budget that we had, the example budget, divided by 12. We threw in some disbursements for capital expenses, and voila, perfect cash flow. There are, there's barely any variation month over month. It looks like we have a very solid stream of revenue coming through, and our expenses are very consistent month to month. If any of you manage nonprofit finance or are finance leaders in your organization, you really understand that this is not the norm. I don't think I've ever seen an organization that has the perfect year divided by 12 in their organization. This is really what we think of when we think of a more accurate cash flow projection. And so in here, you'll see that there is a lot more variety in both income and expense. In this version of the projection, we see, up on top, so we still, begin our month of July with $35,971 in the bank. But we see that as you look forward to the different months ahead, you're beginning November, December, March, April, and May all in the red. And so that means we are starting the month with a deficit of unrestricted cash, or at least that's what we're projecting when we really write down how we think that the year is going to play out. So, this organization has pretty consistent government grants. in August through May. They have a variety of different grants coming in, as well as some fees for service that are fairly consistent year over year, as well as accounts receivable collection. But their disbursements also vary quite a bit from just divided by 12 versions. So we see that in October and April, the organization has increased payroll expenses. So this suggests that this might be a month with 3 payrolls instead of 2 payrolls. And if you are planning, across the board for 12 months of 2 payrolls per month, and you're not planning for that month where might be 3, that could be a real cash flow challenge for you when you have to run that 3rd payroll. Along with that, you'll see that this organization is paying it looks like some payroll tax on more of a quarterly basis than a monthly basis, and so that increases expenses every quarter as well. When you look at some other things that stick out, we have an accounting or audit expense of $10,000 in October, and so that's one big, pretty lump sum. And you also see program materials and resources, that last disbursement for operations line, where it looks like they are, the months that they have more activities, more programs, that they're spending more on materials. And then finally, we see those disbursements for capital expenses again. But this is a cash flow projection that is a little tricky because we're gonna go negative in the month of October. So question becomes, how can we even out the cash flow and make our operations work? How can we make it through month to month without going negative? So this is what I will call a managed cash flow example using our accurate assumptions. So it's not divided by 12. Numbers are the same, but we've tweaked a few things. So for example, you can see that under the grants income and individual contributions income, we've moved up some of those grants coming in. So perhaps you have a really great relationship with your grant manager, and you can say, hey, we really need the payment of $10,000 scheduled to happen in August instead of September, or this payment in January to happen instead of April. Really would help out our cash flow. We might also consider moving up or doing a special appeal for individual contributions to help sort of make the operations cash flow better. You'll also see that there's special event income in both January and May. In the previous example, we just had it in May. Having that extra support of an event happening in January, again, helps even out the organization's cash flow. You'll see under disbursements that the organization really leveled out its payroll tax expense. So they're paying monthly now instead of quarterly. And that, again, also helps sort of even out the disbursement throughout the year, month over month. It looks like they also changed their insurance payments from a once per year payment in October in the last example to quarterly payments instead. And again, that it just assists in not having that huge outflow of cash on 1 month a year. They did the same thing with their accounting and audit. Instead of paying $10,000 in October, they're paying $1,250 for a few months. And finally, they instead of purchasing a vehicle for $20,000, they leased a vehicle. So now they have a monthly expense of $275 that lease versus a huge sort of outpouring of cash of $20,000 at one point. So making all of these changes has helped this organization sort of even out its cash flow. You'll see in this example, there are definitely months where they have net negative cash, but their ending cash position never goes below 0. In fact, it never goes below 14,000. And so this is a much more managed and stable cash flow projection. Now you might kind of wonder, okay, so how is this, how can we translate this to the moment that we're in? And really, the moment that we're in, I would say we have the opportunity to sort of run some different scenarios. And so as I'm talking to some of my colleagues at Propel and some different clients, we're talking about, having our sort of first draft standard normal operations cash flow projection, and then creating a few different scenarios. One would be maybe cutting back and slowing down. Maybe that means our income is really slowing down, but also that we can cut back some of our expenses. Perhaps we shut down all operations. And so the only thing we're paying is rent, or to keep the website on, or something like that, so that you can really, I'm going to go back to my previous slide here. When you're thinking about scenario planning, you can really play with the numbers and see what works. So let's say you are planning for, all of your fees at the time of service to be wiped out, your special event income to go away, and perhaps you'll anticipate an increase in individual contributions over that time. So that would help you sort of get a better picture for the next few weeks or months of what your income might look like. Let's say you also, reduced staffing by 50%. You could play with those numbers and see, okay, so a 50% reduction in payroll means that we're saving $11,000 per month. So when you put it down on the spreadsheet and sort of play with the numbers and see how things work out, it can be a really helpful tool to help you make a plan for moving forward during this really sort of fuzzy time where we don't know what's happening next. Bottom line, running some different scenarios gives you a chance to kind of figure out what options you have and what the next few weeks or months might look like. So I know everything seems really urgent and maybe a little bit scary right now, but kind of taking a pause and having the opportunity to run some of these scenarios can be really helpful as you look forward to sort of what's next. So a few things to consider when we ask that question of sort of what's next is to look at your operation. What do things look like in your organization right now? Is your income affected? Like I said, I work with a variety of organizations where they have in-person educational offerings, or they have concerts, or theatrical productions, and that income, those ticket sales have all just gone away for an unknown amount of time. So obviously, we would be creating some projections where our the income is way down. Another thing to consider in a moment like this is you have reserves. So maybe you have been building up some reserve money for a rainy day or for an emergency. Well, here it is. It's raining and it's an emergency. As you build cash flow projections, you can also kind of look at what, for example, a contribution from your emergency fund into your operating account might look like. Maybe you transfer $1,000 a month for a few months. If you can do that, that's great. It gives you some options to sort of play with and to consider at this time. The other thing to consider is sort of what does short-term, midterm, long-term look like for you? Yesterday, in preparation for the webinar, I shared a piece that Steve Zimmerman wrote this week or last week for Nonprofit Quarterly. And he talked about how, nonprofits are usually so focused on sustainability that the idea at this moment is really more survivability. And can we make it through the next month, next 3 months, the next year, what has in store for us? And so he really recommended figuring out right away what your cash position is. So how much cash do you have operate, and how long will that last? That could be a really scary question to figure out the answer to, because for some organizations, maybe the answer is we have 2 weeks of operating cash and we have a really short term a really short period of time to kind of figure out what to do next. Maybe you have some reserves set aside. Maybe you do have some operating cash in your account, and your sort of short-term period to kind of get set, make some decisions, do some projections is maybe more like up to 3 months. Um, so really understanding what your cash position is in this moment is really important because it kind of answers one of those questions of like, what can we do next, and how do we do that? And then really fleshing out some of the the details or the different scenarios in a cash flow projection can really help you move forward into making those midterm and long-term goals. At this moment, given the uncertainty, a long-term goal for an organization, it might be like what happens in 9 weeks from now. Or it might be what happens over the next 2 years. So again, just kind of checking in with your organization, seeing where you are as far as how much cash do you have and how long could you operate if nothing changed, right? If you weren't able to bring in any income over the next few months, if you weren't able to cut any expense, how much time would you have to operate? And we'll share that Steve Zimmerman story with you in resources when we're done here with the webinar. So we kind of alluded to it a little bit as we were talking about sort of the realistic cash flow projection versus the managed cash flow projection where we've moved some stuff around to make it work. There are definitely some strategies I think that you can employ at a time like this, but also just really any time in real life as you look at your cash flow projections. So a big thing is building relationships with your foundation program officers, your major donors, with contract managers. That allows you the opportunity to give them a call and say, hey, we would really need this payment moved up a month. Is that possible? If you move up the payment, we can cash flow the organization just fine. It's also important to analyze grant cycles and contract terms, timing of your annual campaign. One of the pieces that helped create a more managed cash flow for the organization we were looking at here was, splitting up their annual event into two parts, one in January, one at the end of the year. And so maybe just kind of rethinking the timing of your annual campaign can help cash flow the organization better. Also looking at contract terms, like maybe your reimbursing contract says you'll get paid within 45 or 60 days. Maybe you can move it up to 30 to 45 days, and that will help bring cash into your organization more quickly. The next piece that maybe seems kind of obvious, but also can be helpful to revisit every once in a while is your invoicing and collection system and practices. If you have a lot of outstanding receivables, maybe it's a worthwhile pursuit to just have a finance staff member call through and see if you can collect on outstanding invoices for a day. Maybe you'll be able to turn around and bring a lot of cash in as a result of just kind of touching base with folks. Other thing is to consider maybe pricing, discounting, early payment offers. It both for you, if you are able to pay early and receive a discount, or if you are offering for example, tickets to an event and you offer like an early bird discount, you may get more interest, you may get more income, or at least you'll have more sort of a better understanding of how many people are going to attend your event or how many tickets will ultimately be sold by gauging sort of the success of an early bird offer like that. I think there are also some things to consider in this moment, specifically in this moment of global pandemic. It's to really check in with your people. And I've said this before, but it's worth saying again. Checking in with your foundation program officers, with major donors. This is the time to kind of see how people are doing and what they're thinking things look like in the next few weeks and months ahead. I think that the philanthropy community has been really responsive, and we're still hearing a lot of information announced each day. There's changes every day, But if you haven't been in touch with those folks yet, I definitely encourage you to reach out. It could also be a really great opportunity, a great time to get restrictions that have been placed on some of your donations released. Let's say you have received some pledges or you've received funds that can only be used during a specific time period or for a specific purpose. This might be a great opportunity to ask the donor if they would release those restrictions, and then you could put that money into your general operating funds at this moment. Another thing I would encourage you to keep an eye on are special granting opportunities and other developments from the Small Business Administration, from both the state and federal level on stimulus packages. I know that all of these things are still being negotiated and figured out, and so we don't have an answer yet, but keeping an eye on the National Council of Nonprofits website as well as the Independent Sector website. Those are both two organizations that really do a lot of lobbying work at the federal level, and they're updating their websites as they are seeing things happen in Washington. The Minnesota Council of Foundations, and the Minnesota Council of Nonprofits both have great resources as well for local philanthropy. There was a call yesterday on some of the special programs that the Minnesota Council on Foundations is putting forth at this moment. And also the Minnesota Council of Nonprofits just today released a special edition of their grant guide. So grants in the time of COVID-19, and that could also be a really helpful resource as you look for maybe some new revenue or different revenue in this moment. Another thing we talked about is also not just managing when your income comes in and how much income you have, but also expense. So planning for seasonal needs and considering options for timing of payroll and benefit plan payments, those are both really helpful things. If you know that you have that 3 payroll month, you can plan ahead for that. Also discussing payment options with service providers can be a really helpful thing. Negotiating installment payments or having longer payment terms, again, can help you even out those payments. Instead of paying $10,000 or $20,000 for your audit in 1 month, breaking that out into payments can be really helpful from a cash flow standpoint. And also, you have full discretion to change the timing of repairs that are not urgent. So, maybe if you have a hole in the roof, that is an urgency that is not negotiable, but if you're planning on doing some discretionary repairs or making some capital purchases, you can play with that timing a lot. Again, some expense management strategies for this moment that we're in, this global pandemic moment, is to discuss payment options with your service providers. And I think the question really here is who must be paid and who can wait. So are there vendors that you can defer for 30, 60, or 90 days, or are there bills that must be paid right now? This is another place where some of your scenario planning could come into play. Perhaps one of the things you're considering is a decrease in staffing or reduction in programming. That is going to change your expenses right now, as well as your income. But it's important to remember, kind of ask yourself this question of who can be paid and who must wait. One of the things that Propel has been able to do in the last week is defer loan payments. So we've deferred loan payments in the month of April for all of our clients in hopes of sort of helping people with their cash flow challenges at this moment. Is something that we can do, and we'll continue to look at how we can help out our clients as they also manage cash flow and their expenses during this time. So there's a few strategies, and again, I would call this sort of like during normal times, some cash management strategies would include using your reserves as an internal line of credit. So I always recommend that if you are planning to spend down your reserves, that you also have a plan to replenish your reserves. However, this might be one of those moments where we are spending down our emergency fund and we're not quite sure yet how it's going to be repaid, but we know we need to do it to keep the organization running. That's the situation, right? This is a unprecedented moment that we're in. You may have other internal funds that you could use to sort of even out your cash flow, or a bank line of credit or a bridge loan. Propel often makes bridge loans to organizations as they're waiting to receive, like a big foundation funding. We have a lot of lines of credit with clients who have reimbursing government grants, for example. But one of the things everyone can do right now is really hoard your cash, and it's kind of a joke, but it's very serious in that, we talked about looking at what are the bills you can pay, what are the bills you can hold off on right now. Keeping hold of as much unrestricted cash as you can right now is really important because it's going to help you sort of achieve that goal of coming out at the end of this with some cash so you can get started in your normal operations once again. It's really important to keep your cash flow projection current. So under, again, sort of normal times, we have clients that often will, create a cash flow projection for like a loan application, for example, and then never touch it again. But this tool is most helpful when you're revisiting it, when you're updating it often. I suggest taking your cup of coffee on Friday morning and updating your cash flow projection for a half hour with the information you've gathered over the course of the week, and then you do it again the next week. In this moment right now where there is such rapid change and there is such a sense of urgency, it might be important for you to update things on a daily basis. And you may want to create a weekly or bi-weekly cash flow projection instead of a monthly cash flow projection for the next 30 or 60 or 90 days. Just so that there is that finer level of detail. And if things are really tight, that level of projection could be very helpful. A few things to keep in mind, again, are the frequency. So how often are you updating your cash flow projection? Update it often and update it in a very detailed way, especially at this moment. All the information that you have about bills you must pay, about income you expect to come in, put that all into your cash flow projection. And also make sure that that everyone who is working on your cash flow projection really understands the assumptions behind it. So obviously we don't know for sure every penny that's going to come into our organization over the next 12 months. Just like a budget, a cash flow projection is partly, aspirational. It's a planning tool, but also to document your assumptions and so that other folks understand sort of why you're putting down the numbers that you're putting down. It's also important to understand sort of who has the responsibility to maintain the document, who is the primary holder of the cash flow projection, who's in charge of it, and then again, how does management and the board use this document? Now, I think in this moment where the next few weeks feel very uncertain, perhaps your revenue has changed drastically in the last week or two, perhaps your programming outputs, you're just unsure of what it's going to look like over the next few months. A cash flow projection can really bring to light quickly when you might start to see challenges, right? When you might run out of cash. And so this tool can be really helpful for both your internal management and your board to use at a time like this. I think that there are, many different ways to share a cash flow projection with your board, for example. During normal times, I often use a chart to kind of show the ups and downs of cash flow with a board of directors. It's a good way to sort of digest the information without getting caught in the weeds of how much money we spend on office supplies every month. But at a time like this where things are sort of serious and urgent, sharing the detailed projection with your board might be appropriate. and also showing the different options that your organization might have, whether it's kind of reducing your operations or reducing staffing for a while, what it would look like to, basically close the organization down to a point where you're just paying rent if you need to. There are so many different scenarios that you can show your board and your leaders in using a cash flow projection that I think will be really helpful in this time. And if there are questions that you have, or you're kind of grappling with how to share this information with your leadership or with your board, that is certainly an area where Propel is happy to help out. So in a few slides here as we wrap up, I do have some contact information for Propel and for our staff. And so I ask you to please don't hesitate to reach out if you do need some help sort of sorting through some of those, the planning and the talking to your board and figuring out what's next. That's what we're here for right now. So this is during normal times, the way we avoid cash flow problems are to plan early and often, to ensure a reliable and thorough budget, make sure that your budget is accurate, and it's ready to go. Make sure that you have quality financial reports and analysis. Make sure that you understand your budget and the assumptions behind it, and also make sure that you have good relationships with your vendors and your contractors and your bankers. I'd add in, foundation folks, funders, major donors. But also, some of these things are going to be a little bit more difficult, I think, during this moment where there is so much uncertainty. Operating at a surplus may not be possible this year, making sure that you are, getting a line of credit or building an internal cash reserve, that just might not be possible over the next few months. And so I just want to acknowledge that. I think we are all, working really hard trying to keep our organizations afloat and working on our missions right now. So that is a thing to sort of keep our eyes on right now. And that's sort of how I'd like to wrap up today. I think I mentioned this before, but I really do feel that like Propel was sort of made for a moment like this, where we have a really talented staff, a lot of expertise, a lot of years of nonprofit management experience, and we're all here to help you out at this moment. So we have a free nonprofit accounting helpline. So if you have questions about accounting related matters, please call us. That number is 612-249-6640. You can look at our staff directory at propelnonprofits.org/staff and find someone to reach out to. We're happy to look over your cash flow projections with you, to look over different scenarios, to talk through how you might present this information to your board. Those are exactly the things we're here for in this moment. And then finally, I know that this is a stressful time. So whether you are feeling strangely calm or you're really nervous about what's ahead, I do wish you good luck. I hope that you can continue to do your good work. I know that the folks in the Minnesota nonprofit community and throughout the United States really care deeply about their work and the people that they're serving. And our services and our expertise is required more than ever right now. Nonprofits are out on the front lines sort of solving a lot of problems right now. And so as you take care of all the other people in your community, I hope that you're able to take some time to take care of yourself as well. Again, good luck, and I hope you will be in touch. Thanks so much for joining us today.